trade talks are making solid progress, easing safe haven demand and putting pressure on gold. But have all the risks already been priced in, and how will this week's FOMC meeting and key economic data shape gold's next move? Find out more in As Good as Gold. Greetings, fellow traders. I'm Dillian, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So gold spent the past week dancing in a familiar range between $3,300 and $3,430, first climbing, then slipping, and ultimately going nowhere fast. Optimism around global trade talks, especially between the US and key partners, has been the main headwind. Still, traditional tailwinds like Fed policy uncertainty, geopolitical tensions, and central bank buying have helped keep the floor. With the packed calendar ahead, tariff updates, the FOMC meeting, and Nonfarm payrolls, expect volatility to pick up. And now, looking at the gold against US dollar daily chart, last Tuesday's attempt to break above the $3,430 ceiling fell flat. Gold then dropped for 4 straight days, breaking both the July high around $33.70 and its 50-day moving average, clear signs of overhead pressure. That said, bulls staged a mild comeback early this week. A rebound above the 50-day MA would set the stage for another run at $33.70, an essential stepping stone if gold wants to reclaim $3,400. On the downside, $3,300 remains a strong support level that's held since June. And I feel like what's different now is obviously the trade backdrop. In recent days, the US has reached key agreements with Japan and the EU, slashing tariffs from 25 to 30% down to only 15%, in exchange for purchasing commitments and a bunch of investment frameworks. While a final deal with China remains in the works, both sides appear to be talking constructively. The market has already priced in a 90-day extension to the tariff truce, pending Trump's final sign-off. And these deals have cooled fears of a major trade blow-up and confirmed the effectiveness of the tackle strategy. The US is signaling it prefers economic leverage and control through negotiation rather than any escalations. And for gold, that means risk of settlement is fading and some capital has rotated back into equities and risk assets, a short-term negative for prices. But still, hurdles in the US-China tariff details and slow progress with India means there's a reason to own gold as a hedge. With tariff wars easing, traders are refocusing on fundamentals and the Fed. The latest jobs report showed job openings dipping to 7.4 million, hinting at a cooling labor market, while inflation, partly driven by tariffs, is creeping back into CPI data. So if baseline tariffs rise from 10% to, say, 15%, that could worsen the stagflation narrative. So while the Fed may stay cautious in July, supporting the dollar and keeping gold in the near term, any data-driven deterioration in growth could quickly reopen the rate cut door and give gold another leg higher. At the same time, geopolitics remain a wildcard, while global central banks are still buying gold hand over fist. That's medium-term support we can't ignore. So overall, gold remains in consolidation mode. The easing in tariff tensions and cooling of fear-driven buying are weighing on prices short-term, but the fast pass, geopolitics, and central bank demand continue to offer solid underlying support. Unless a surprise hits, I personally feel like the sideways trend is likely to continue. And looking ahead, this week is stacked with Tier 1 events. The big question would be, will we get a surprise from trade talks or a policy shift from the Fed? While on tariffs, market will focus on the fine print of the US-China tariff details. Key mineral exports, semiconductor access, and auto sector restrictions are all potentially on the radar. With the Japan and EU deals as templates, I feel like the August 1st tariff deadline could potentially pass quietly unless US-China talks break down or unexpectedly accelerate. Beyond tariffs, the FOMC, Q2 GDP of the US, and Nonfarm payrolls could all be pivotal for gold. I mean, no one expects a July cut for sure, but Powell's turn and the statement wording will shape expectations for September. If the Fed highlights inflation stickiness or economic resilience, market may push out rate cut bets weighing on gold. But if GDP disappoints and Powell sounds more dovish, gold could catch a fresh bid. And core PCE and non-farm payrolls will round out the week, with June CPI showing a slight bounce. Traders may lean on non-farm payrolls for some fresh clues. Any big miss, say drops under 100,000 and unemployment over 4.3%, might prompt the Fed to reconsider rate cuts, potentially fueling a renewed gold buying. So that's pretty much all for this week. If this video is helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming events and data might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!